Hey, what is up, everyone? Welcome back to Market Psychology 101, where we try to find value where there's fear and to be cautious when there is greed. If you like anything I say, please consider liking and subscribing. For today's video, I wanted to go over the Magnificent Seven, the top seven stocks in the S&P. So that's Apple, Microsoft, Google, Amazon, Nvidia, Meta, and Tesla. We're going to be taking a brief look at all those stocks. Before we do, before we jump into those uh, and I will share what I look for when to buy in those stocks. Let's take a quick look at the fear and greed index. So today we finally hit extreme greed. So from my perspective, I'm going to say that you should be extremely cautious. Anytime we hit extreme greed, we're usually due for a pullback. So right now, extreme greed all across the board. Now it can't go higher. Looked like we had more extreme greed from the McClellan indicator here back in July. I still do believe we are going to go a little bit higher. But right now, the market is extreme greed. We just hit there today. Also, smart money versus dumb money. As you can see, smart money is still curling down, and dumb money at the time, retail money, us, is still curling up. People are buying into the hype. They're trying to get in, all the excitement that they're hearing about. Stocks are good. People feel good, so they try jumping into the market. And I'm going to show you why that might not be the best idea and that it may be better to just wait. Now, I hope that goes without saying that all because I'm telling you to be cautious and I'm saying I personally wouldn't buy. That does not mean that Apple can't do something ridiculous and shoot up a bunch from here. Okay. I'm not in the business of trying to use a crystal ball to make predictions. I've been wrong many times. So I'm not going to try to tell you that it can or can't go anywhere. And of course, nothing I say here is financial advice. Okay. Just so we're clear, this is just for entertainment. But looking at Apple, here are some things I look for. When I start on a chart of anything, I go to the yearly first and I check out the RSI, the Relative Strength Index. Is it recently oversold or overbought? Oversold, anything under 50 is where I tend to like getting a stock. Now, this is on the daily. We'll go to the weekly, which I like even more. When it's overbought, not so much. Oversold, sure. So that's one thing. Right now, we're overbought. But as you can see with Apple, we could stay overbought and go up for a while. Here, I mean, look at this. If you were just going from after it went down to when it was overbought from April of 23 to July of 23. So that lasted for 4 months. Here, November, are we going to go and stay in the overbought area until February? Maybe. But, anyways, let's go to the weekly. This will take us further back in time. And again, I like when things are oversold or at least below 50. If you would have just on the RSI alone, and again, not financial advice, this is just one of a few indicators to consider. On the RSI alone, if you just buy when it's tapping or hitting below 50, overall you're doing pretty well. Now here, as you can see, you would have bought there and it would have taken a while to see any gains. That was March of 22. We were at 160. You wouldn't have seen any profit until look straight down on that line, April of 23. So you would have had to wait a year. Okay, so this does require patience. And again, I wouldn't recommend only using this strategy. Hitting the oversold, maybe like now it's a really strong time to buy. Heck, let's take even a look at the monthly. At the monthly, this is going all the way back to 2005, dang near the dot-com bubble. Anything below 50 historically on the monthly for Apple, a great time to buy. And we recently had that for Apple in January of 23. So here are some other indicators I like. I've shown you the UT bottle alert one. I'm not going to be showing that one as much for today, but it's another one that gives recommendations when to buy and sell, and it looks different if you put it on the weekly, the daily. I like to take a long-term approach here, but again, I don't want to be stuck looking at this one today. There's a couple here that I really like, and one is the MACD plus SMA, that's small moving average 200 strategy. Okay, there's this one. And then there's also, this is the one I think I'm going to use for today's video, bull market support band, 20-week SMA, 21-week EMA. Okay, so this is another one where you can take a look that as it's under the bull market support band, it tends to be a good time to buy, and when the RSI is oversold. So that's my personal opinion, something I look for. And again, it's not to say that things can't tank more. You know, if we go back to the great financial crisis in here, you know, we stayed under the bull market support band for a while. So this would have been a very hard time for people to go through. This will take a while to scroll back. Let's go to the 5-year. Sorry, don't mean to make any of you sick. So if you exclusively bought under the bull market support band all the time or when it touches, look, you would have had to wait from January of 08 to July of 09 to get back above it, at least for Apple. So this does require patience, and it can be hard when you're like, okay, I just bought here, and then boom, it tanks. You know, it goes from 6 to 3 and does a 50% loss. But again, if you believe in it, the stock or the crypto, those times where it's selling off, you're looking at it as a good time to buy. And there are alerts to say whether or not it's getting ready to go back up. I like this 1020 moving average crossover with the Fibonacci signals. This one right here, it'll give you, I like it more on the monthly. It'll give you an indicator of if it's looking like it wants to green go up or red go down, and it can switch very easily. It's one reason why I do like the UT bot alert for the buying and selling. I mean, this is just on Apple here. Look at all that chop in the 90s. But after the dot-com bubble, how many buy signals have we had? After the dot-com bubble crash, 1, 2, 3, 4, 5, 6, 7, 8, 9. So overall, you would have done pretty well for yourself just by comparing those indicators. And again, that's just a couple things briefly that I look at. Right now, Apple is overbought, and so I am staying on the sidelines. Let's take a look at the next one, Microsoft. We'll go through these quicker now that I've explained things I'm looking for. So Microsoft, a bit of sideways motion, getting close to touching that 50 band, maybe even going under. When it touches that 50 band, I mean, look here, it was at 330, and even when it went way under to oversold, it only went down to 318, 316. You know, so that still would have been a decent time. And I like Microsoft overall a lot as a stock. It's actually one of my favorites. So, you know, if you go to the weekly, again, anytime it goes below 50 on the weekly or even touches, that tends to be good times to buy. Let's take a look at Google. And, oh, I forgot. Let me put on the bull market support band. At Google, times is below 50 on the weekly RSI. Now look what happened here. This is, again, why, you know, you might want to be cautious. You know, some of you are seeing this and maybe thinking, you know what, I'm just going to use that indicator. It looks simple. Boom, that's all I'm going to do. Under 50 here, look, you're still at those prices if you bought back then, January of 22. So 2 years and you're still around the same spot. Okay. Now, if you want to be more patient, wait for it to hit the oversold areas, double, triple tap, you know, you would be doing a lot better for yourself. Hitting the oversold, you would have almost tripled your profits if you were just being patient, waiting for it to hit the oversold areas. So again, Guys, if you're going to only buy under 50, you are going to need more patience, and this is something that can happen. That we are just going sideways. Okay, let's go to Amazon. Amazon's one I like a lot. I keep trying to psych myself out of Amazon because here's my perspective. When you were living in the 80s or 90s, you probably thought malls were going to be around forever. Stores like Kmart, Target, all those. And a lot of those places are struggling now. Everything is within Amazon. So my question is, how could Amazon go the way of the mall or the Kmart? Right now, I can't think of a reason, but if you can think of one, let me know in the comments down below. But again, here, the weekly, if we just look for when it's oversold, look where the price is. Now, here is a bit higher. That's why I like to personally wait for it to double, even triple tap and buy in those areas. Not to say that it can't here, but remember when we looked at something like Apple, it rarely touches here. And so, if it does it once, it may never touch again. Like here, if you're waiting for it to touch and you're like, you know what, I like this price level, I'm going to buy it, not the worst idea. It never went back down there. It kind of got close here, but it never went back down again. So you would have missed that opportunity if you were waiting. So there's a risk, and that's why, even any of these indicators, nothing's a sure thing, just so we're clear. NVIDIA, great semiconductor stock. It was very oversold in October 22. I was lucky enough to get some back then. I was feeling really great about that. NVIDIA, again, look, it's rarely ever double or triple taps here. Got below. Here it got close. And if we just take a look at the yearly, this is part of my plan. Is it in the overbought region? Seems to be trending downwards. And so maybe it's going to experience some capitulation. And by the time the year goes on, if it gets back down to the 300s or even mid 200 levels, which is possible, maybe the RSI is going to be way down here. And then you can zoom out, take a look at the weekly. Maybe the RSI is going to be down here, and it might be time to buy. So for a lot of these, I'm recommending patience. Meta, let's take a look at Meta in the last year. Elevated price was more overbought, but it's becoming slowly oversold. So here, we're double tapping, hitting low again. But overall, the trend does appear to be going down. So let's zoom out. If we zoom out, we were very oversold in here for a bit from February of 22 to October 22. I did get some Meta around here. Here would have been another good time. Obviously, that's a COVID crash. Everything would have been a good buy at that time. But right now, as you take a look, as we zoom out on the weekly, we're still at the overbought area. Are we going to get back below 50 or even lower? Last one, Tesla. Now, Tesla's a tricky one, and here's why. So Tesla, its market cap is 800 billion. That's about 40 times larger than Ford. I believe Ford is around 40 billion. But in any case, Tesla tends to be the most highly traded stock. Oftentimes, if you're just looking at trades, things with looking at the charts of calls versus puts, Tesla is usually up there as one of the top five, like every single day. And so I do believe because it's traded so often that that kind of artificially drives its price up. I do not like Tesla overall for its value. Now, as a company, you can feel differently about it. But still, it's one of those where because it's the most traded stock and because it's worth 40 times more market cap than Ford, that's why I feel very cautious. And that's nothing against Elon Musk or Tesla as a car company. They've done a lot of great and wonderful things. But if you're just comparing it in those ways, that could be reason to be cautious. Now, let's just take a look at, some things I normally do. More in the overbought zone. It was very overbought back here. when it was oversold. Not too much lower, actually. But let's zoom out, take a look. Anytime is below 50. Back here, the price 13. Can you imagine getting Tesla at 13 and then 20xing your money just from May of 19? I mean, that's another reason why I'm cautious on this, because for something the 20x, it has really gone above and beyond. And we're going to pull out the pi cycle chart in a bit. Here it was oversold again. And remember, this time, late 22 is a great time to buy. Is 116. I want to say it got close to 100. Yes, it wicked down to 100 and then boom, it blasted off, bounced off 100 very well. And so, if you would have bought when it was in the oversold region, looking at the weekly on the RSI, that would have been a good time. But what I say we're going to do, we're going to take a look at the pi cycle chart. It's funny to see when things hit a pi cycle. Yep. Anytime something 20x's or goes, above a 10x really quickly, that's why I'm like, there had to have been a pi cycle high. And sure enough, but take a look at this, pi cycle high at 140, and we've been above that. So if you would have just sold the pi cycle high, you would have missed on, 140. God, not just doubling your profits, but even more, almost tripling your profits at the very highest. So if you would have waited for it to 2.5, or to be overbought again, sure, that would have been very hard to do. This would have been very hard not to sell, because look at this. The overbought area was coming down, but then boom, it was overbought again. And then, if you would have been patient, probably would have been great to just sell in here. But again, with it having a pi cycle high and still being relatively near those prices within 3 years, that's why I believe, for multiple reasons, Tesla's in an artificial bubble with how highly it's traded. So do be cautious with Tesla. Um, but that's not to say it can't become a $1.5 trillion company. Who knows? That would be odd for a car company, because again, if we just look at something like Ford, most common car company there is, yeah, $48 billion market cap. So almost 40 times less in value. And I know Tesla's very different than Ford, but that's just, at least on the surface, something I look at. Um, is there anything else I wanted to talk about today? Yeah, guys, I'd just say with going back to the fear and greed index, being an extreme greed, smart money still curling down, smart money, retail money, dumb money, us, still curling up. That's why I'm being extremely cautious right now. That's why I am waiting on the sidelines, because these great stocks, they don't give you a lot of opportunities to get in them. But when there is a good opportunity, you have to jump on it. People use these stocks. So right now, here's another thing I want to talk about. What's been happening recently in the market, you've been maybe hearing about low breadth in the markets. So the top stocks are holding greater value while the smaller stocks are holding less. And some people are hoping that there'll be a rotation from the big stocks to the other stocks, the ones with a lot less value and market cap, similar to Bitcoin and Ethereum rotating into the other large, mid, small caps. Okay, when that happens, you're getting close to the end of the Bitcoin bull run, but we're not going to talk too much about Bitcoin. So because people are putting their money into safer stocks and Mag 7 stocks, a lot of people are believing they're becoming a bit more inflated than they should be. But again, just something I look at. I look at the yearly. Where's the price? Is it near the top? The bottom right now, things are way up here. If you would have been back here around this time, early 2023, it's kind of in the middle, or even late 22, that could have been a time to say, you know what, Microsoft is at near its yearly low. It got close to touching the oversold area, the RSI, I might consider buying. That's just one simple start to a plan or strategy. I'm going to encourage all of you to have a lot more to your plan than that. Look at the stock. It's learn what its PE ratio is. Learn about what a financial moat is, how much debt they have, how much expenditures, how much extra cash they have. Those are all good things to look into. What kind of person they have running the company? Is this one thing I think about often? A very simple question. Do you see this product being around in 20 years? It's hard to look for that much. But if you can find some excuses, be like, you know what? This product might become replaceable in 10, 20 years. I don't like investing into it for the long term. So, that's just something I'm looking for here. Went to the weekly. You could just take a look at the UT bot alert on the weekly. How often does it say buy? How about on the monthly? If you just follow the monthly, overall, you do pretty well. I like the weekly though. If you just go by the weekly and you take a look, is it within, the past year, is it within a low as well? Price, RSI, all that. Anyways, so with all that being said, I'm being cautious right now, especially with extreme greed in the market. You should always be extra cautious. When it's extreme fear, we're doing the opposite. I want you to be excited when there's a lot of fear. It can be easy to hold on to your money and worry that things are going to go lower. But wouldn't you rather buy when we're here and the prices are lower than when everyone's feeling good? And it's easy for us to, be empathetic, compassionate, and want to feel good with others. Guys, you're going to get less return on your investment if you are buying when people are feeling good and talking about how great their stocks and cryptos are doing. It is more advantageous to buy during extreme fear. That's when stocks, cryptos are on discount. That's when the prices are going to get you more value. So I want you to practice thinking as a contrarian now, as well as doing your research, playing with different indicators, playing with trend lines, something I've done with Bitcoin. Play with trend line in the RSI. Is it rotating back into the oversold region? What's the price action doing? Create your own plan. Check out what the S&P is doing. Is the S&P looking to rotate? We've talked about this before, the VIX versus the VVIX. Anytime it's bottoming tends to be a local top in the market cycle. And when it's topping, tends to be close to when there's a local bottom. So where's October of 22? Oh, would you look at that? It's up here. When it's topping, that was a bottom in the markets across many stocks. So if the VIX versus VVIX is getting up here, probably a good time to buy, and there will be extreme fear. VIX right now, very low. When it's spiking up above 30, 35, 40, great time to buy. That's when things are discounted. So that's all. That's going to be all for today. I'm just trying to encourage you guys to be smart, be cautious, be patient, go for a walk outside, meditate, do whatever you got to do to be patient so you're not chasing the hype, the FOMO, fear of missing out, and all that sort of stuff. And if you have any strategies you would like to share below, things you would recommend, again, I want this to be a community channel where we're helping each other, sharing ideas, thoughts, stocks, cryptos. I'm happy to look at any stock, crypto, or strategy that you want. And I'm also happy to hear any feedback or criticism if you have that too. I am welcome to it. My request is that we try to keep things constructive, never personal, but constructive, so we can all help each other learn and grow and see things from different perspectives, not just mine, but all of ours. So anyways, hope you enjoyed that video today and that you guys have a wonderful week. None of this is financial advice. I'm not a financial advisor. This is just purely for entertainment. And I do have a lot of years, knowledge, and experience and certification in the field of psychology that I've used to help me do very well in stocks and crypto by doing exactly what I've shown you today. I don't buy when things are extremely greedy. I like to buy when things are in extreme fear, when we're oversold, when there's a stock I like that I believe in that's going to be around for 10 plus years, one that I use. So do some research. Look around your house. What are the 5 top products that you use? Take a look at those on TradingView in the stocks. Maybe you have a Garmin watch, maybe you have a Toyota car, maybe you use a lot of Apple, Microsoft, Samsung, whatever it is. What are the top 5, 10 things you use? Type that into TradingView. Take a look at the stocks. Is it overbought? Is the price in the last year at a yearly high? Is it at an all-time high? Look at all those things, because that way, as you spend more time in the market, when it does rotate down, and it will, it rotates down for everything eventually. I know right now it feels like it'll go up forever, but it will rotate down eventually. And when it does, that way you can have a good opportunity to buy and you don't miss out on those opportunities. Okay, it's not to say we can't go way up and then crash back near the levels we're at now. That's very possible. You never know. But there are more sure, safe ways to look into this. So, anyways, hope you all are doing well and that you enjoyed this video. Take care.